Hey guys, good evening. Dave Santarelli here from optionstrading.college and Santarelli School of Options. In tonight's class, I wanted to go over, first off, I'm going to be going over the headlines and what's going to be driving the markets this week. Then we're going to be going over SPY, Diamond, and Qs, those charts. Let's get started here first with the charting on SPY. First off, nice thing with our trade plan, guys, and we've called this for quite some time here. Just get up my. Alrighty. So we were able to call SPY pulling back on this big candle right here. How were we able to do that? We were able to start buying some SPY puts and start profiting to the downside. Well, our trade plan, here's our MACD cross below. This is check mark number one. Check mark number two is a 1020 cross below. And right when we had that 1020 cross below, we are right here on SPY. We started trading SPY puts a little bit earlier on, like I said, on this larger red candle. We had some news about the tariffs coming in, and then we also had the MACD crossover. So we started trading some SPY puts here. We are definitely in that BDM cycle. BDM is the breakdown momentum cycle of our trade plan. We have the 1020 cross, and then you can see for that entire time right here, we've been in that breakdown momentum cycle. And now we could see something different that's happened and we were talking about. So we had a large 10% correction from the highs here of about 613, 613, and then we pulled way back down here to about 550. That was our lows at that 550 level. Now, what happens with our trade plan once we have that strong breakdown, that 10% correction, we usually see a little bit of buyers stepping in, some value investors stepping in, or someone buying that large dip, that 10% correction that we just had. So then what did we have? We had a little bit of a climb there. There was some positive signs in the market there with Trump talking with Zelensky and coming to an agreement with Putin. And what did we do? Per trade plan, we got right up to that blue 20-day simple moving average. We rejected and we started pulling back. And we were discussing this way back in this BDM cycle back here when it was pulling back. I was telling members we're going to get that bounce after that strong pullback, and we're either going to get up to that 10 or 20-day simple moving average, fail, and then reject and start that next pullback. Well, we're just starting to get that MACD cross below right now. The futures are absolutely tanking, which we're going to be going over. And we are at 551 right now on SPY as futures sit right now at about 10:20 p.m. on Sunday, March 30th, 2025. So we closed at 555.66. We're at 551 right now with futures, and we're continuing that pullback. So first support here is going to be at that 550. Now, if I clear this out here and we go out a little bit further, once we drop below that 550, and like I said, it's just the tip of the iceberg right now with all the tariffs coming in. The economy is contracting there, a lot of job loss, and they revised GDP to the downside this last week. So once we break below that 550, I think we're easily going to see that 525 right here. And then our secondary target's going to be that 500. You know, we just started that BDM cycle on that daily chart here. We had the BDM cycle start. Here was that sharp pullback, and we got a little bit of a bounce and climbed back up to old support there, which was 575. We got up to that just now after that pullback in that BDM cycle. We're failing, rejecting. We break below that 550. We're going to be looking for that 525. So the nice thing about what we did is we were able to sell our shares when we saw the market starting to pull back way back here, sold all the shares of JEPQ, every share that we had, and we started trading some puts there. And we're trading to the downside. And right now we're in a couple of trades. I did start buying JEPQ here on this pullback and a little bit on the climb here. I started adding to it again on Friday, and I'm going to continue to add to JEPQ, which pays a large monthly dividend there, and a solid ETF managed by JP Morgan Chase, which I'll be going over that as well. But for right now, SPY's in that BDM cycle. We have 550 as that next support. We break below that 550. We're going to be looking for that 525 and then that 500. So right now, what I wanted to go over in today's class is that we're seeing that rejection at that blue 20. We have tariffs kicking in, and then we got a lot of data coming up this week as well. Take a look at this. Here's the economic calendar for this week. Um, Monday, it's a pretty slow day here. Tuesday, we got construction spending, which is a lagging indicator right here. You can see construction spending. We have leading and lagging indicators. Construction spending, the actual amount of money spent on construction projects, can lag behind changes in the broader economy. So it's known as a lagging indicator. But it's definitely an indicator that you're looking at, because if construction spending is down, usually home sales are down, and then mortgage applications are down usually as well. It's a trickle down effect there. So then Tuesday's the big day. We got construction spending. We have ISM manufacturing numbers coming out at 10 a.m. And then we have the job openings, which is going to be very important as well. And then we also have Tuesday auto sales coming in. So that's going to tell us, are people buying cars here ahead of the tariffs, or are they backing off here? And if they're backing off completely, that's a sign of worsening economic conditions here going forward. So we got that coming up on Tuesday. Wednesday, we got factory orders, ADP employment. And then Thursday is another big day. We got initial jobless claims, the U.S. trade deficit. We have the ISM services. We have the Fed speaking a little bit there. And then Friday, U.S. unemployment report, U.S. unemployment rate, U.S. hourly wages coming out. And then Jerome Powell is going to be speaking a little bit at 11:25 on Friday. So it's going to be a very busy week as far as the economic calendar is concerned. And then remember, we got tariffs kicking in on April 2nd. So that's another driving factor for the markets to continue to pull back here. As I was just going on live, there was breaking news coming across. You guys aren't going to be able to access this because I have access to Bloomberg here. But Bloomberg here, Trump threatens Russia oil penalties, citing anger with Putin. So it looks like he's threatening secondary tariffs on buyers of Russian oil. So any country that buys Russian oil, he's going to be tariffing those countries. So as you can see right now, the markets are absolutely pulling back here quite a bit. We got the Dow down right now about 170 points. We got the S&P 500 down about 38, and the Nasdaq's down another 223 points, with tech leading the markets with losses here. So here is SPY, got up to that blue 20-day simple moving average, rejecting, pulling back. Let's take a look at Qs and tech. Obviously, Qs just absolutely annihilated that 20-day simple moving average, rejected that big red candle that came in and took out 2 weeks of a climb there from those lows. Back on March 13th. So March 13th, we saw that low. For 2 weeks, we got a little bit of a climb there up to that blue 20. Now we're rejecting hard, pulling back. And tech was overbloated there, so I'm expecting tech to see a further pullback here as well. I could see 450 easily on Qs, possibly this week with the tariffs kicking in. And then longer term there, I think we could easily see that 400. Because you have to remember, they're changing the forecast of GDP. They're lowering it, revising that to the downside. Unemployment rate is up a little bit more than expected. So they increased the unemployment rate for 2025. And they also increased in inflationary numbers for 2025. They're saying inflation is going to be higher than expected due to the tariffs and economic conditions here. So you got Qs continuing to fail, pull back here. So like I said, this is just the tip of the iceberg. We got a lot of economic conditions that are pointing to the markets further to the downside here, and it's not going to be resolved until those tariffs are over. So you have to make sure that if you have shares in your accounts, you have to protect yourself and hedge yourself to the downside, and you do that with some SPY puts here. Or you could get diamond Q puts, whatever it is you like. And we're also going to go over some other ETFs, ultra short ETFs here, some inverse ETFs that do the opposite of the market. I got one of them that I really like here. I wanted to go over with you guys. But diamond, I mean, these are your industrials. So this is a lot of the stuff that's going to be tariffed. You're seeing a pullback here from the highs. We had a double top right here, right around that 45,100. We had a double top here on Dow from December and then again in February here. And now we're starting that pullback. Here's a 10 crossing below that 20. And we have the MACD that crossed in middle of February. And we started that BDM. We had a sharp breakdown from that 451 all the way down to that 410. And now we got that little bit of a climb up to that blue 20, which is showing you just like Diamond, just like Q's, just like SPY, everything got up to that blue 20, failed, rejected, and starting to pull back. So Diamond, we could see that next support right around that Dow 41,000. Diamond 410 right here. We pull back below that. We're easily going to see that 400, possibly down to that 380, which is Dow 38,000 after just being at 45,000. So you got to be cautious here. We're just starting that breakdown. You can see here was the top of the market. I mean, this is going way out here. I'm going out. Let's do a 5-year chart. Here's a 5-year chart of Diamond. This is the Dow Jones Industrial Average ETF. So we're just seeing that double top pulling back. And like I said, we could easily see that 400. We have tariffs kicking in, inflation creeping higher here. And then obviously the tariffs that are going to be kicking in April 2nd are going to cause inflation to even go higher and the markets continue to pull back. Consumer confidence is at 12-year lows. So keep that in mind. There's a lot of things pointing to a further pullback in the markets right here. So we saw SPY, Diamond, and Q's there. So everything on that daily chart, we go to that 6-month daily. You can see we're rejecting at that blue 20 again on SPY. Q's, same thing, rejection at that blue 20. And then Diamond, we're seeing a rejection at that blue 20-day simple moving average. The moving average convergence divergence is crossing below again here, and we're going to be trading below the zero line on this grabbing the MACD. So you got to take a look at that. So, all that we're in right now are shares of JEPQ and SCHD. JEPQ is an ETF here that's managed by the best portfolio managers at JP Morgan Chase. It pays a very large monthly dividend. Let me bring that up. JEPQ, it pays almost 11% a year just in dividends. So this is a premium income ETF, meaning that it's making you income on a monthly basis. It pays a dividend every single month, just around the same time each month, the first week of the month. Pays a large dividend per share, 48 cents there, a little over 48 cents on March 3rd. This week, we'll be hearing the next ex-dividend on JEPQ. So you still have time to jump in shares, collect that dividend on this pullback. And like I said, this is one that I'm just adding to on a monthly basis. It pays you a large monthly income. Think of that as your paycheck. So JEPQ is definitely one that I want to add on pullbacks. I usually add when she pulls back at least 5%. So I'll be looking for my next ad below $50 a share. I really want to look and target that 47.50 for a larger quantity of JEPQ shares, which I think she is going to come down and test that, maybe even down to that 45. But I think she'll probably bottom out right around that 45. But JEPQ is one that I'm adding to. And then SCHD, this is another large one. Now, this one's more of a defensive play. This one has a lot of your defensive plays in it. Let me see here. We'll look at SCHD largest holdings. So right here, you can see SCHD, their largest holdings right here are your defensive stocks, your ConocoPhillips. They got a lot of energy, a lot of communication, and a lot of pharmaceuticals. Okay, so you got ConocoPhillips, Chevron, they're your two oil plays, Bristol Myers Squibb, your pharma. Verizon Communications, it pays almost a 6% annual dividend, and it's something that people need. They don't say, "Hey, I'm not going to pay my cell phone bill this month and go without it." Just like gas, energy, pharmaceuticals, people need that. They're not going to stop their heart medications because the inflation's running a little bit high, or because things are getting tight. Hopefully they don't do that. And then your Coca-Cola, which we just heard too about Robert Kennedy, RFK Jr. They're going to be limiting, I guess, soda. It's going to be all soda from food stamps. So, I didn't know this until I did research into this last week, but 30 to 40% of Coca-Cola's U.S. revenue comes from food stamp purchases, which is incredible. Altria, this is a large dividend play. Altria, obviously, a cigarette company. They make e-cigarettes, cigarettes. Large dividend play, PepsiCo, Cisco, Home Depot, Lockheed Martin, defensive plays, UPS, Schlumberger. Target's a great buy at the current price there, I feel. And then some other stuff down there as well. So SCHD, it usually holds up pretty well when the market pulls back because there's a lot of defensive plays in there, like your Verizon, your oil plays. So you could see it didn't have that large of a pullback compared to SPY, Diamond, and Qs. So this is a good ETF to buy, hold long term there. And as if you could see here, 5-year chart here, I mean, she went from 17 bucks to $30 there. You know, if we go back a little bit further, let's go back. It's not letting me go back there. Let's just change it to a weekly chart. That way I could go back a little bit further. So here's what SCHD has done in its lifetime, you know, just from 2011 there. So from 2012, $8.63 a share all the way up to about 30. And it pays a massive dividend on a quarterly basis as well. So I like this one. I'll be adding to that one. I'll be adding to JEPQ on larger pullbacks there. And then, like I said, the only thing we're hedging it with now is SPY puts. We're in a SPY put right now. We're in a few of them. Here's one of them right here that we picked up late last week. Here's a SPY put. I mean, this is just one on Robinhood. I'm not logged into E-Trade right now. But here's one of them right here. We're up 117.67% on it. And we just got into this trade there. We got into it on my phone. It tells me when I got into it, but I got into it on the I think it was the 27th, 26th or 27th. We got into that trade. And we're already up 117% on this. So this is a SPY put. It makes money as the market drops. So as SPY continues to pull back, this trade will make money. So we have official trades in SPY puts. Now this one here expires this Friday. So it is the April 4th expiration. So what I'm going to do in the morning is I'm going to be locking in this trade here and the SPY puts that expire this week that we have. I'll be locking that in, and then I'm going to be getting some SPY puts a little bit further out, probably going out to like the May expiration. I want to look for that further pullback on these tariffs kicking in, and then getting that data that we're going to be getting coming up there in April. So that data is going to start showing the inflation. It's going to start showing the job loss, the unemployment claims. We're also seeing mortgage defaults at the highest levels since 2008 again. FHA delinquencies are up over 11%. They're at an all-time high. FHA delinquencies are at 11%. That means out of 100 FHA loans, 11 of them are delinquent right now. You know, this is just the tip of the iceberg. We haven't seen much yet. So that's why I'm telling you guys, be prepared. Look at this chart on a weekly chart now, a SPY. This is so each one of these candles represent 1 week. We're just starting that BDM cycle on the weekly chart. And usually when we start that BDM cycle on a weekly chart, we pull back for a while here. Like, look at this pullback we had back in 2022, where we went from SPY 476 all the way down to 350. There wasn't even that much news there for us to pull back that much from 470, you know, about 480 there, 478, 480, all the way down to 350. Right now, we have major economic conditions and tariffs coming in, job loss, delinquencies at highs. We're going to continue to see this pullback on SPY. So it's very important, you know, for you to stay in tune. Make sure you're picking up puts there to protect your shares. So you're hedging your shares with SPY puts, usually about 5 to 10%. And then, you know, what we've been doing is day trading and scalping SPY on an intraday chart. Every day we go live 9:30 to 11 and then 3 to 4, and we day trade and scalp SPY all day long. And you know, Friday we went, I think, 5 for 5 with our SPY puts. We did it incredibly well, and we're going to be looking to do the same here coming in this week because we're going to see some major volatility in the markets this week. And I definitely want to go out with further expirations with swing trades, and then obviously day trades there will capitalize with some short-term momentum there. Now, so that's the markets there on the daily and weekly charts. Now, let's take a look here. I was talking about this ultra short ETF here. So this is the ProShares Ultra Short S&P 500. SDS is the ticker symbol. First off, it pays 4.3% a year in dividends. Amazing. You're getting paid almost 4.5% annually in dividends. Okay. Now, obviously, you don't want to own this when the market's climbing, right? When the market's climbing, these shares are going to drop because this is short the S&P 500. So, excuse me, these shares, they make money as the market pulls back. So let's take a look at that ticker. What was it? It was SDS. So we'd look at SDS here. We pull that up. You could see the market was climbing. So this was pulling back. Now, recently, since the market was dropping since February here, this has been getting a nice climb. This went from $18 a share all the way up to $22.50, all while paying that large dividend. So we saw it just when SPY just had that little bit of a climb for that 2 weeks I told you about. This pulled back for that 2 weeks. So now that we're starting to get this breakdown again, this is going to climb and run like crazy here. So I could easily see this getting back up to at least 25, maybe 27.50. Longer term, maybe by the end of the year at $30 a share. But this is one that's a nice little hedge share for you to own. Pick this up here. If you don't have any shares of anything, you might want to be in this for a few months. This is going to make money. This ETF here is going to make money as the market drops, and it's going to pay you an ETF. It's going to pay you a large dividend there. It's a great ETF to have for a dividend, and then also for the pullback in the markets there. So you can see it pays it on a quarterly basis. It just had the ex-dividend date last week, so you're not going to get another dividend for about 3 months there. But a nice one there to own. So SDS, that's probably one I'm going to be looking to pick up there probably sometime tomorrow. I'll probably pick up some shares of SDS. But the big one there, guys, is we're going to be looking at some SPY puts. So looking at that daily chart, let's bring up an option chain on SPY. What I want to look at is like that May expiration. Now, what we can't do, we don't have to just get a regular SPY put, because if we take a look here and we look, she's at 555 right now. After hours, she's at 551. So let's take a look at the 550 strike put there. 550 strike put going out to the May monthly expiration. The monthly expo is the third Friday of every month. It's 47 days till expiration right here. And that 555 is going for $14 right now, just about, right? So that means for us to make money, let me get my calculator here. So strike price 555 minus $14. Your break even is going to be at 541 minus another $14 there, and you have 100% gain at 527. So she gets down to 527, which you have your first support at 550, and your second support is going to be right around that 525. So she drops down to 527. You have a 100% gain on these 555 strike SPY puts right here. 555 strike SPY put. That is the put. Over here is the call side, and that's for the May monthly expiration. So you can see that's May monthly expo, 47 days till expiration. SPY right now is at 555.66. We think SPY is going to be heading much lower. So you profit to the downside by picking up a put, which makes money as the market drops. 555 strike puts going for $14. Now, since there are 100 shares per contract, you have to multiply that $14 by 100. So each one of these contracts are going to cost you $1,401 for a single contract. And then she gets down to 527. That 1401 is now worth $2,802 at 527. And then that's a 100% gain on that SPY put. Now, that's with the SPY put. That's just with a regular SPY put. Now let's look at a different strategy here at a vertical put spread and see what that makes. So right here, if you just pick up that SPY put, number one, it's going to cost you $1,401 for a single contract, and you need a large drop there down to 527 for that 100% gain. Okay, so remember those numbers there. 527, 100% gain. with that SPY put, and it's going to cost you $1,400. Okay, now if we look at that vertical put spread, let's take a look at a vertical put spread here. Now, if we take a look at this, let's say we wanted to do something that's, that's going to make us money below, let's say, 545. So we could pick up the 546, 545 vertical put spread. So that means, all that really means right here, all this means, that's the April monthly expo. Let's go to the May monthly expo like we did before on that other SPY put. So right now, we'd be looking to buy the 546 strike put. So now vertical spreads are very simple for you to understand here. All it means is you're buying something, you're buying SPY for one price and you're selling it for another. So this is a SPY put spread, right? It's a put spread. You see type here is put and it's a spread. Why is it a spread? Because you're buying the 546 and you're selling it to someone for 545. And like I said, this makes money as the market drops. So as it continues to drop, this put spread makes money. It's capped at the difference between the two strikes. So what is the spread between these two strikes? From 545 to 546, that's $1. Okay, that's the max this trade could be worth. The max's vertical put spread could be worth is $1. Well, right now it's going for 31 cents. 31 cents to $1. That's a max net return right there of 1. Divide that by 0.31. That is a 222.58% gain. So you have a 222.58% gain. And in this scenario, you only need SPY to be below 545. So she just needs to be below right here. And you have a 222% gain compared to the SPY put. You needed it at 527 for a 100% gain, if you remember that. So 527 for that SPY put, you have a 100% gain. This vertical put spread, it's a different strategy. And this one here is going for 31 cents. The max it could be worth is the difference between your two strikes, which is $1. And as long as she's at or below 545 by your May monthly expiration, this trade here that you picked up for 31 cents would be worth $1 and you'd have a 222.58% gain. So it's very important to understand different strategies that you can be utilizing to maximize your profits on the downside here. And that's what we do every day on our live stream. We're analyzing different strategies and seeing what's going to maximize our profits on our strategies as we reject at that blue 20-day simple moving average and continue in that BDM cycle of our trade plan. Now, I would not be going long anything in this market right now, especially with calls or anything like that. The only thing, if you wanted to buy some calls on, you'd obviously look at your defensive plays, your Lockheed Martin, your Raytheon Technologies. You could be looking at stuff like that. I don't know why this just pulled off here. Let me pull this back up. All right, sorry about that. Oh, that's good. It all came right back up. So that was the position that we were just looking at right there, is that vertical put spread that we weren't looking at that one. We were looking at the 546 and the 545. So that was going for 31 cents. The max that could be worth is $1 right there. And all you need is SPY to be at or below 545 a share to have that max gain of 222.58%, compared to that SPY put that you needed it to be at 527 for 100% gain. So very nice vertical put spread to look at here. I think, and that was not for the April, that was for the May Expo. 31 cents max it could be worth is $1. Just make sure you're always doing a limit. That's going to be a limit debit order. Like when you're doing a vertical put spread, you see the bid and the ask and then the midpoint. I always put a limit at the midpoint there because you have a big difference between your bid and the ask. If you do a market order here, if you did a market order, it's going to fill it at 38 cents. And if you do a market order to sell, it's going to sell it at 24. So you never want to do a market order on any type of spread because you have two legs there that have a large difference between the bid and the ask, and both of those combined create a larger spread for the buy there and then the sell. So make sure you guys are doing a limit debit order when you're buying it, and then a limit credit order when you're selling that trade there. So great opportunity right there on SPY with a vertical put spread going out a little bit further, or you could pick up that SPY put if you just want something. You can buy it, set it, forget it, and hold on to that for a larger pullback there if you think we're pulling back down below 525 there from now until the May monthly expiration. But either way, guys, this week, what we're going to be looking for, we're going to look for that SPY to continue to pull back. I don't think we're really going to see too much of a rally this week. We got tariffs kicking in. We got a lot of economic data coming in. We have some more earnings coming in as well. And there's a lot of talk there, especially with Trump announcing that he wants to take over Greenland. He's saying he doesn't think he'll need military force, but it's not off the table. He's getting very aggressive with the Panama Canal, saying we're going to be using our military. He's actually looking for ways to use the military to take over the Panama Canal now. And then obviously we just heard the breaking news that came out at 10:09 p.m. tonight with Russia. That just came out right here at 10:09 p.m. Trump threatens Russia oil penalty, citing anger with Putin. So he's putting secondary tariffs on buyers of Russian oil. So any country that buys Russian oil, Trump is going to tariff them now. So that's some major news that's coming out, and we definitely have to be prepared for that. Our SPY puts are going to be up tremendously in the morning there. I mean, SPY, if we can take a look here at the pre-market, the futures here, we're seeing the markets get absolutely slammed. The Dow's down 200 points just about right now. We have the S&P 500 down about 41.94, and then we have the Nasdaq down another 231 points. I mean, our SPY puts are going to be making some nice profits tomorrow morning, guys. I'm going to be locking in those profits within the first 15, 30 minutes after opening bell. And then, like I said, I'm utilizing those proceeds to buy more puts further out, given the economic conditions and the tariffs that are going to be implemented this week. And then obviously when those tariffs kick in, that data is going to be showing up in next month's monthly data that comes out from the government. So we should see some bad numbers coming out from the government. And like I said, the tariffs kicking in, inflation's going to pick up. We got, a lot of disputes there with what Trump's saying about Greenland, with Panama Canal, with Russia right now. Ukraine just came out a few hours ago saying Russia's been targeting them with drones. So things are heating up, and I think we're going to see a much larger pullback. So I'm just letting you know right now, I'm going to be picking up more SPY puts. Make sure you get a further out expo. Short-term expos, don't do that. If you're going to do short-term, come on the live stream with us, day trade and scalp. We've been going 4 for 4, 5 for 5 with our day trades, following through with our trade plan on the intraday 1 minute, 3 minute, and 5 minute charts. And we've been doing extremely well. So come join us on the live stream tomorrow morning, 9:30 a.m. We'll be going over the markets. We'll be going over our strategy of locking in. We're probably going to be up over 200% on the SPY puts that we picked up that are currently up 117.67% right here. This is just one of the positions we're in, but we're up 117.67% on this one. It's for the 4/4 expiration. I'm going to be locking that one in, and then I'm going to be going with something either for the 5 or the 6 expiration. So either the May or the June expiration, I'll be allocating capital on those trades then going forward. So we are going to see a continued pullback here in the markets. Like I said, if you wanted to capitalize on it, you could be picking up some shares of SDS, which is ultra short S&P 500. This makes money and climbs in value as the market pulls back. So as the stock market drops, this stock, or this ETF, I should say, will make you profits, and it also pays a nice dividend there. So keep SDS on your watch list, and we're looking great on our trades there tomorrow, guys. So let's capitalize on the pullback that we're going to be seeing. We should see a larger aggressive pullback this week with tariffs kicking in, and be prepared for it. Like I said, I would not go long anything. I would be looking to short the markets, buy puts longer term, and then leave the live streams there for day trades and scalps. That's going to be the strategy here for the next week. The live streams are going to be day trades and scalps, and then obviously if I do a swing trade there, I'll announce that. I'll post that in the WhatsApp, and then I'll send an email alert out with that as well. But we're looking for that further pullback. Let's capitalize with some SPY puts, maybe some different strategies with a SPY vertical put spread, and capitalize as the markets pull back here with tariffs kicking in this week. So that's going to be the game plan and strategy, guys. We're already seeing a larger pullback. Let's see what SPY is at right now. SPY. Man, SPY right now is at 551.68. So we're continuing to see that pullback in the market here, and like I said, let's capitalize on it tomorrow. We had a great week last week capitalizing with day trades and scalps. Let's keep that up, and hope you guys had a great weekend. And let's make some money this week. Should be easy money this week with the economic events that we have coming in. That's gonna likely show some poor data coming in from the government. Along with, we have tariffs kicking in, we have the geopolitical tensions with Trump, Russia, China, Ukraine, Canada, Mexico. I mean, it doesn't stop. So watch for that continued pullback. Take advantage of the momentum in the markets. And like I said, save yourself some time. Give yourself a little bit further out expo on your longer term swing trades, and then save the short term trades for your day trades and scalps. So like I said, I expect us to break below that 550 by Wednesday and continue back down towards that 525 at some point throughout April here, going into April. So great strategies going ahead, guys. I gave you guys a few with some SPY puts, some SPY vertical put spreads, and then also with the ETFs. These are inverse ETFs. You know, SPY, it makes money as the market drops. SDS right here. And then, like I said, for JEPQ, next place I'll look to add, I'll probably add a little bit around $50, and then I'll be looking at 47.50, and then hopefully she gets down to that 45. I could be much more aggressive and add quite a bit of shares there, because once she rebounds, you're going to get that share appreciation. Plus, you're going to collect that large monthly dividend on a monthly basis there with JEPQ. So I like that one longer term right now. I wouldn't put all your eggs in one basket right now because she's not finished pulling back, but I like to add and average down as we pull back here. I just started my buy right around here, and then I added up here. So my average price point on JEPQ right now is at, let me see here, 52.53. So 52.53 is right here. So this is my average price point on JEPQ, and this is looking at a daily chart. Let's see, 52.53, my average cost basis. So let me bring that up. Here's my JEPQ. And this is just in the E-Trade one, or not E-Trade, the Robinhood investing one right here. 426 shares, 52.53, and that's the average cost basis. So once we start getting a little bit lower there, I'll add probably more around 50. I'll probably add like another 250 to 300 shares. If we get down to 47.50, I'll probably add about another 1,000 to 1,500 shares. Get down to 45, I'm going to be a little bit more aggressive there, pick up a few thousand shares of JEPQ. And then obviously it might take a couple of years to rebound back up to all-time highs of around 58.60, but we will get there. JEPQ is a top ETF there, and once the markets rebound, that will rebound with it as well. So that's going to be my strategy with JEPQ. But for right now, let's make money as the markets pull back there with some SPY puts. I got a lot of money on the sideline there, looking for some stocks to jump into. But like I said, now is not the time. Markets are going to continue to pull back, so I'd rather wait, look for those lows, find some support, and then utilize that capital there for some shares. Right now, I'm just, taking advantage of the momentum in the markets with some options. Some puts here as the market pulls back is going to make you a fortune. And like I said, we're just seeing the tip of the iceberg right now. We're going to continue to pull back. So make sure you guys come join us. You guys could go to www.optionstrading.college and come join us there. And I will be seeing you guys live tomorrow at about, we'll go live probably about 9:15, 9:20. We'll go over the markets there. We'll go over our current trades there, our SPY puts. We'll look and see what we're going to be locking those in on. Like I said, we'll have about a 200% or more, 200% profit on the SPY puts that expire this Friday. I'll lock those in, and then I'll utilize those proceeds there for a further out SPY put, maybe for that May or even the June expiration. So I will see you guys tomorrow morning, 9:15, and hope you guys had a great weekend and are ready for some profits this week. Let's take advantage of that momentum in the markets and the pullback coming in with the tariffs kicking in and the economic data that's going to be coming out this week. And let's continue to profit to the downside here. Look forward to seeing you guys tomorrow. Have a great night. Take care. God bless. And have a good night.